Hey, doing? It's John Duke, Union Home Mortgage. I'm here at Sidebar in East Lansing with Brian Osmond from Bella Bay Realty. This is our monthly pubcast, Taproom Talks. Crazy market. We're in July right now. We are in the midst of a turn. I'm feeling. If you compare things to where we were last year, are you kind of feeling the same?
Slightly, if
No.
you're speaking up or down.
Yeah. Well, I think down is the number of transactions. I believe right now, the number of transactions from what I've read is a little bit down from last year.
Absolutely.
Is that right?
Absolutely.
What I'm feeling is that my buyers are having a better opportunity to win deals right now. Um, I don't know what that's really a testament to. Hopefully, we're doing a good job with getting them
Sure.
pre-approved, obviously. But what are you seeing? What are some things that are hot right now for you?
The market's just hot in general.
Mm-hmm.
In most markets, we'll just say that. Um, in certain price points, as soon as it hits the market, I mean, our days on market might be 4 days versus two
Mm-hmm.
in certain markets, and a little longer in others. But you're seeing that inventory comes on and it goes.
Yeah.
In fact, our closed units versus our new units
Mm-hmm.
is still outweighing. The closed units is higher
Sure.
in our board. But whatever turn you're talking, only time will tell. Obviously, the more inventory.
Yeah.
I see more new builds closing than I have in years past.
Yeah. Nationally speaking, that number was up. Housing starts were up over last year. Not huge, but
Right.
it's certainly going in the right direction as
Yeah,
well.
it's ticking up. Whether it's one or two units more
Yep.
than it was, it's going up.
Yep.
Um, I've seen, just with talking with you and
Mm-hmm.
the email that you sent out, this 580 credit score,
Mm-hmm.
lowering that threshold for
Mm-hmm.
VA and FHA buyers.
Yep.
I'd like to learn a little bit more about that. I mean, are we
Sure.
looking at
I think
targeting people with bad credit?
it's not bad credit. No, absolutely not, because Fannie Mae and Freddie Mac still has to accept the file through their desktop underwriting system and loan prospectors. So they still have to have an approve eligible online. But yes, we lowered it to 580 for both FHA and VA. That is correct. We want to bring it more inclusive, have a bigger palette, I guess is a pretty good word, of people that can get approved. Now, this is not bad credit. Oftentimes, these are people just with minimal credit.
Okay.
If you think back to maybe when you were 19, 20, 21 years old, if you can think back that far, I know I
Right.
can't. I might have only had one credit card, no car payment, one credit card, and the bank may have only extended me $1,000. Well, as soon as I owe more than $350 on that $1,000 credit card, right now through the algorithms, my credit could suffer.
Mm.
Okay, because of my utilization is more than 30% of the available balance.
Okay.
Well, that doesn't mean I have bad credit.
Sure.
That just
No.
means I have minimal credit.
Right.
So if all other, in the eyes of Fannie Mae and Freddie Mac, if you check all of the other boxes with income or capacity, if you will, the collateral is there, we have some reserves, and they check those boxes, very good chance we'll get an approved eligible. Now, we're talking about FHA and VA. I'm going to put the question back to you because I think on our side, we're trying to do our part to bring inclusivity to more buyers. The challenge is, and I'd like to hear from you as to why are a lot of listing agents and therefore sellers not wanting to take or look at FHA or VA financing?
Well, first and foremost, on the seller side, it's the education they're getting from their agent, right?
Yep.
That and on the agent side, in defense of us, what we have seen historically is an FHA or VA appraiser is going to be a little harder on the property,
Mm-hmm.
scrutinize it a little bit more
Yeah.
than a conventional.
But doesn't that protect the buyer?
It does protect the buyer.
Okay.
It does.
Mm-hmm.
But we're talking on the seller side.
I agree. I understand. I understand.
That definitely protects the buyer.
Yes.
And in fact, in some appraisers' eyes, that's what they're there to do.
Yeah.
That's,
Sure.
maybe their fiduciary duty or whatever
Sure.
you want to say in their terms. But
does it make, if you as a listing agent take that listing and you do your due diligence up front and you make sure that that property meets all lending guidelines, whether it's FHA, VA, conventional, USDA, if it's in the right spot, does that make that property more marketable?
110%, 150%.
Yeah.
I mean, to get more attention to it,
Sure.
opening up to I wouldn't say the masses, but a diverse lending style of
More
people.
inclusive. More inclusive.
More inclusive.
Yeah.
That's
more availability for buyers. So let me paint this picture for you from a marketing standpoint, from being able to attract more people into your sphere. You do an open house and you have all types of financing listed on that property. Does it stand to reason that you might be able to scale your business a little bit better with more buyers in the future by putting that out there?
Absolutely.
Okay.
110%.
Yeah. So that's kind of where I think our market is going right now. There has definitely been a shift in credit quality since COVID.
Sure.
Okay. It is what it is. I've noticed it from the beginning. We are doing a lot more credit counseling than we've ever done before. I enjoy doing that. It really is I feel like I'm serving a need, and I'm, helping somebody that maybe isn't being helped elsewhere. But that being said, I would love to see those buyers have a better chance of being able to purchase that home on an FHA loan and VA loan. And in many instances, because the mortgage insurance premium is fixed on an FHA and VA loan, or FHA VA has got a funding fee, it's actually often more affordable, no matter the credit score.
Yeah, I'm sure FHA has always been more favorable to the consumer.
It can be. Not always. I mean, if you're getting in the higher echelon of credit scores, conventional is going to be more affordable to them. But in that spot where a lot of people exist, it becomes more affordable. Let's be honest. There's probably more people in that medium income level and possibly in the lower income, or not income, sorry, but credit area than there has been in the past. So I think we have to serve those needs. There is going to be a time when our market does shift to where there is an abundance of inventory. It will happen at some point.
Sure.
And we want to be best prepared to be able to serve that need too.
Right. Yeah, absolutely. And so this 580 credit score, once again, to go back to what you said before, isn't really to help the person with the
They're not the ones with the late payments.
Okay, right.
They're not late payments.
It's just they've never built.
Collections.
They haven't.
It just maybe hasn't been built. And here's the thing about credit scoring. Number one, credit scoring is an algorithm. It's not somebody sitting behind a desk determining that Brian deserves this score.
Right.
So there are ways to cheat that system. The other big part is a mortgage has the biggest impact on one's credit score. A little bit of the tail that wags the dog there, right? So what I mean is that once I have a mortgage, if I've got a 580 credit score because I only have that one credit card that has utilization above 30%, now I get a home. I've given a chance to purchase a home, to get myself out of renting into purchasing, building wealth, and guess what? My score probably goes up about 100 points with 12 good payments on that mortgage. And now you got a median credit score. So we're really trying to help more people, increase the sphere of number of people that we can help build wealth through home ownership. And that's what we're both doing. And
I think a lot of these 580 credit score people have never talked to someone about their credit and how to build it, and credit counseling.
Yeah, it's credit counseling. It's just counseling in general. We call it a financial design meeting. After somebody's completed their pre-approval, we do a financial design meeting and really put them on a path and educate them as to how purchasing a home can build, in some cases, generational wealth. And that doesn't have anything to do with their credit score.
Right.
It's just simply changing the narrative from renting to buying, which
point.
I think we've always been on the same page and wanted to be masters of that, right?
Absolutely.
This is always fun. My name is John Duke. I'm with Union Home Mortgage. Brian Osmond with Bella Bay. This is our pubcast, Taproom Talks. Cheers. Have a wonderful day.
I don't have a shit.
I don't have a shit.
Kind of crazy. I don't know. them big elephant guns.
Big elephant.
Got a big old tuba looking end on it.